Good evening, everyone. Time for another silver update. This is the 8-hour chart provided by netdania.com. You can click on the link below, and you can see that silver is falling very sharply now as of this morning, especially with the economic news that was announced. The stock market sold off, the oil market sold off, the stock market subsequently rallied, gold and silver both sold off, the interest rates are dropping dramatically. So this is your typical deflation scare scenario type of thing they'd like to cook up before they bring about another quantitative easing. So some people have speculated that it will come at the end of summer. I don't know. It just depends how bad this sell-off becomes, and it could actually come much sooner than that. So we're down around 29.24. You can see here I've drawn a trend channel. This trend line here in the upper part of the trend channel, based on that, it's not exact, but it's been tested. You can see 1, 2, 3, 4. This one came up above it. 5. So 5 times tested. You can see we're now rounding down on the inside of this towards the bottom of this trend channel. The very bottom of the trend channel happens to be 26, which also happens to be the low, the September smackdown low, and the end of the year retest low. So 26 is definitely the target for a retest. Will we get there? I don't know. There doesn't seem to be a lot of support in this area. You can see that when we were back even around the price we're at right now, there was violent swings up and down. So very high volatility in this area in the past, except for this little section here, which stretches from about 28 up to about 30. So we're right in the mid-range of this section, and there is some congestion at that point. Otherwise, below 28, there's really nothing between 28 and 26. And then, of course, on the very long-term chart, there's really not a lot between 26 and 22 or so. So it is possible that we could cut through that like a knife through butter and just slice all the way down there. I don't think the price would stay down there that long, but it would be a very serious shakeout of any longs in any of the paper markets. It would be a very serious shakeout. So let's go over to a question of the night, and then I really want to just spend the rest of the update looking at silver and what's out there. So this question comes from Quiet Like, and he says, can you explain these charts? A friend posted this. It's a New York Times link. Can you explain to me how this is possible? I really want to respond to a friend who is boasting that Obama is shrinking the size of government. P.S. You don't have to do a vid on this. A reply would be sufficient. Actually, it's a really good one, especially when I saw these charts, so I wanted to do this, cover this on the video. Now, this is an article from the New York Times, the famous Krugman hosting New York Times. So, first of all, anything the New York Times says you're going to take with a grain of salt. They are pretty much habitual liars when it comes to anything that has to do with economics. They are just beyond the pale. And this is no exception when we look at this. So let's dig into this a little bit here. Off the charts, shrinking government. The government sector of the economy shrank during the first 3 years of the Obama administration, but the private sector grew more rapidly than it did during the first 3 years of either George W. Bush's terms in office. The charts show the growth in gross domestic product from the first quarter of the year in which each president was inaugurated through the first quarter of the subsequent election year. All figures are adjusted for inflation. So this is kind of like the statements they make about that they're going to give a tax cut, and then they state after that, well, how are we going to pay for that? Which is ridiculous on its face. You don't have to pay for a cut. That's just outright silliness. You have to pay for spending. So if you cut spending, there's nothing to pay for. So these people, these liberals, leftists, socialists, whatever you want to call them, Obama, same group, they're so confused in their economic thinking. They're either so confused or so deluded and so deceived that they're incapable of any type of rational thought when it comes to economics. So what you're looking at here, believe it or not, is their conception of the government's share of GDP versus the private sector's share of GDP. Okay, so they're not talking about the size of government shrinking. They're talking about the government's GDP shrank. Now, anybody who believes that the government contributes to GDP, there's really no point in even discussing anything with them. The government never contributes to GDP. It only takes away from GDP. Governments do not grow anything. They only take away from the private sector. Now, I can imagine a situation, maybe if you were in some type of Egyptian slave colony like in ancient Egypt, or maybe a Babylonian economy where you literally have the masses of the people are slaves, where they work for the sovereign, and they're actually working in the fields, they're working crops, they're working manufacturing, they're working all this stuff for the government. Then yes, it would make some sense to talk about government GDP. But in this situation where the vast majority, 90-something% of the people who work for government, and note here that somehow they put state and local spending in here. What on earth does state and local spending have to do with the president? I have no idea. But they threw that in there. But if somehow you had a system near slavery where the people were working for the government and they were producing wealth in the society, then yes, you could talk about government GDP. But in the situation that we're in, 90% of the people who work for government are a hindrance to the GDP. They stifle growth, they stifle small business, they stifle corporations, they stifle everything that grows and creates jobs, and yet they're saying that the government is part of GDP. So this is just another step in the socialist mindset of the New York Times, the Obama administration, the far, far left, because that's what today's left wing is, really, is the far, far left. Nothing like the left out of history. So this is just crazy stuff. It doesn't even make any sense. Anybody who can think straight really has a hard time even comprehending what these people are talking about. So no, your friend doesn't know what he's talking about. The government has grown larger under Barack Obama as a percentage than it has under any previous president. It's very clear to see by the enormous increase in the federal budget, but even worse, the increase in the budget deficit and the debt. So that's just a ridiculous notion. Only somebody who would actually read the New York Times would believe anything like this. Now, let's go over to the coins. I did some research on APMEX and Gainesville. I just want to look at those two. I didn't go over and look at Provident, but we're starting to see, anytime you see these spikes down, we're not actually on a spike down here on silver price, but we're actually drifting lower. So this is a really good time to go and look and see how the inventory is doing. Now my first check I did here was on Gainesville, and I went and just did buy silver, and the first one that jumped out at me is, well, I went down and checked the Takus because I bought those. Those are gone. They're out of stock. I went and checked the kookaburras. You can see that they have the older ones here, but the newer ones, for the most part, are out of stock. Let's get down to 2012. The 1 ounce is out of stock of the 2010. I don't see the 2012 here. Standard 1 ounce. This is actually done, oh, it's by product name. Let's go ahead and do it in terms of price so we get the lowest deals. So you can see your best deal there is going to be the 92 kook for $34.37. That's kind of an interesting play for someone who's a collector. That's about $5 over spot though, so that's pretty high. So here's your 2012 kookaburra. That's your second cheapest, and you can see here the cheapest you're going to get that coin for is $36.87. So $36.87 with a $29.26 spot price, that gives you a full $7.50 above spot. So using that, just that example, I would say we're starting to see a disconnect on the price. But we're going to need to check a few more coins to see if that's the case. So let's take a look at the koalas, see if there's anything left. There's my 2007. Now it's up to $125 they want for that coin. The 2012 1 ounce, that's not bad. $33.21. That's $4 above spot. Your half ounce at equivalent 39. That's going to be almost, that's $10 above spot. So not a bad deal on the 2012 koala series over at Gainesville. Let's see if there's anything else that jumps out. It doesn't appear to be anything that's that good of a deal, but we'll go ahead and sort this by price as well. And there's the 2012 half ounce. So you can get the half ounce. Yeah, the half ounce of the 2011 is very high at $31. So that's about it for the koalas. The 1 ounce in the 2011 is gone. And the other one we want to look at here, we can look at the Lunar Series 2. There's the Year of the Dragon. Let's check and see. The 1 ounce has pretty much been frozen at $75, at least over at APMEX. Same thing over here at Gainesville. The price is not moving at all, no matter what the price of silver does. So we'll switch this one in order of price. Your half ounce is out of stock. Now I think they had them over at APMEX. We'll check that next. And there's a Year of the Rabbit. So there's really not a lot there. So looking at the semi-numies, let's go over and check real quick over the RCM and see if any of those moose or cougars are available at low prices, because those are a good semi-numi play potentially, in my opinion. And it looks like we've got a lot of these old coins here, out of stock old coins, because we're going in terms of price. So here's your lowest one here that's available. Here's your 2012 straight maple leaf, and you can get that for $31.49. That's a pretty good deal. That's just a little bit over $2 above spot where we currently are at. And there's the moose, and that's $32.04, so it's a little bit less than $3. So I would say that is a pretty good deal. The moose, I don't know whether that's, people consider that a semi-numismatic play. Never mind that. I don't know whether that's a semi-numismatic play or not, but the cougar down below, you can see, is actually out of stock, as are all the rest. So that's Gainesville. We're starting to see signs that things are getting a little bit thin. Let's go over to APMEX and see what we have over there. So one of the first ones I wanted to check was the the Elephant series because that's one I've been following since I bought those. I bought the 2011. You can see here the 1 ounce 2012, $3.49 above spot. If they had it, that would put it about, let's see, $29.60. That put that coin at about $32.60, and that would be a really good price if you can get them. But they're out, so they don't have the 2012. Here's the 2011 1 ounce, and you can get that a little bit over $5 over spot. So that's not that bad. Looks like they have a huge number of them, 6,333. Doesn't look like they're willing to pull that price down that much, although it says price reduced. So that might be one you want to keep an eye on if we get a big dip here, and you might be able to pick it up cheaply. The Takus, looks like the 2012 is in stock, but at $36.27, looks like they're asking a full $7 above spot. So that appears to be another one that is beginning the disconnection process as the paper price of silver continues to drop, but the price of the coins themselves doesn't. Let's check the koalas. And our 2012 1 ounce koala, $33.26. That's not great, but that's not that bad. They've got about 5,000 in stock, and you can get that just $4 above spot. The 2012 half ounce, $18.63. I think I got mine for 22 bucks, so you're getting a real good deal over what I got mine over, or price I got mine for. And there's 1,200 of those left. Let's go down to the 2011 1 ounce, and you're talking about $6 over spot for the 2011. The 2010, they probably don't have any of the 1 ounce in, and that's going to be $59. So once we get to the older ones, then you're talking about a serious premium. They all seem to be about 60 bucks. 2008's about 90 bucks. 2007 they want $150 for that. So that's the koalas. And check one more here. Let's go ahead and check the RCM over at APMEX and see what they have. I don't know why they put... Oh, I chose silver products. RCM, and we'll do the wildlife series. Okay, so we've got our moose at the top, and that's a pretty good price there, $32.58 for the moose. That's going to be just above $3 over spot. There looks to be an enormous number of them, $3.29 over spot. So this really might be one you want to keep your eye on. If you see a tremendous spike drop down in the price of silver, say a real fast $2 move or something, you could save yourself a real fast $2. You might see this actually go down to 30 bucks if we get that type of drop. So that's definitely one I'm going to keep my eye on. Here's the cougar they've got, and they've got 3,000 of those. Same thing. This one's a little bit closer, $3.79 over spot. Still a really good deal. And they actually have a grizzly in here that is going to be about $8 over spot. But that's a really nice coin. You can see that the Canadian Wolf series, that's never coming back down. It's stuck up at $65. So very interesting pricing you want to watch as silver dives down rapidly. You're going to want to see if you can jump in and get some real deals, or if it just continues to drift lower. It's even more interesting because you can watch as the availability of these coins dries up and the deals become thinner and thinner. Of course, you can always look for your junk silver bags. You can always look for your straight Philharmonics or Eagles or Maples. Those will be the last to sell out. But your semi-NUMI coins are going to start to get snapped up. And usually that's an indication when you see that happen across the board, that's an indication that you're at least at a short-term low, if not a serious low. And we'll talk to you next time.